Can't even explain how crazy that is. Is the recession over? Is it? Isn't it? What's the deal? Hi guys, thank you for joining me in another video. I wanted to do a quick video on sort of like current affairs and news, just to keep people updated about what I'm seeing in the news based on the current situation, how the markets are reacting, what the general consensus is through my reading. So these short videos are just little summaries of what's hot in the news at the moment. It's been an odd week for financial markets and the news. Lockdown, however, has had a little bit of a silver lining in terms of consumer spending. Data from Yolt money management tool has found that 70% more money has been moved into savings account over this period of lockdown. That's amazing. Like, imagine people are saving 70% more if they're lucky enough to still have steady income streams. They've also found that there's been a 63% increase in the amount people are investing. I can't even say that's amazing. And so there's lots of reasons for this. For example, generous furlough schemes, mortgage holidays, that means people have more cash in hand. Spending routes are closed, so people aren't able to go into the shop and buy those impulse purchases that will take away your savings. In April alone, we saved 16.2 billion compared to 5 billion in what would have been an old normal month. And of course, there are those people out there who say the circumstances are super unique, and I agree with that. They are super unique. Did anyone else see the news about the 3.5-hour long queues as soon as IKEA said that they were going to open on the 1st of June? Because consumer spending is still an urge. People still want to get out there, spend the money, consume. That might sound amusing, but what it has shown is that we can be forced into frugality, we can be forced into saving, and as a result our personal balance sheets completely improve. I know these spending habits and these saving habits, they might not continue, but the data does support a V-shaped recovery. And yes, there has been a bull market recovery. FTSE 100 itself went up by 25% in March alone compared to its low points. And the S&P is also up by about 33% in the same month of March. Many people are just perplexed as to why that's happening, myself included. Why? Why is this happening? We're far from having the virus under control. We're nowhere near having a vaccine. Employment levels are at all-time lows. One thing to remember is that the market is based on expectations, and in periods of shock, there is also periods of adjustment in the recovery. And movement in either direction is quite swift. So as quickly as we'll go low, we're quite often followed by a quick high. When you think about it, markets were originally spearheaded by technology and pharmaceuticals, but now the other industries are actually catching up. So you've got the car makers out there, the retail industry, all of these are, the travel industry, they're all catching up quite quickly. Looking back at my own portfolio then, which I can share at some point if you guys are interested, just let me know in the comments. It's now in the positive territory, and it's led by small caps. Compared to my husband's, at one point he was down by 40%, and we were literally like scared for our lives. Imagine all your investments going in, and at the lowest point he was down 40%, but now the markets have recovered and he's only down by about 10%, and even then he performed better than the FTSE. It's not too bad when you really think about it. I use momentum screens myself and seeing new opportunities every day, so I've had to strengthen my quality indicators to ensure that I'm filtering out stock to a smaller set. And there's still volatility surrounding the biostocks industry. Don't get me wrong, I'm not going to be jumping on the bandwagon and buying biotech. If you remember my video from last week, I'll link it down below, where I spoke about specific bio companies and the volatility associated by them, reported by the Financial Times. That stuff is crazy. Stay away from these trends and these crazy stories. The question is, should we stop investing now? And the short answer is hell no. Keep investing. Markets over time generally have an upward trend based on history, and not being a consistent investor exposes you a little bit more, and it's more detrimental. My philosophy pretty much remains the same: earn, save and invest in broad index funds. I do feel like we are on track for a slow growth or another correction. According to the Financial Times, in the UK, spending shrank by more than a third in April alone. ONS, who keep track of unemployment, calculated that unemployment rose from about 850,000 to 2.1 million in just April. So those falling earnings has pushed stock market valuations up almost 22 times, which is the same as .com levels. Despite all of these factors and all of these negative stories, we do see markets grow, and they demonstrate strong growth time and time again. I know we need balls of steel, and you may see those 40% losses for, you know, a week or two or a month or two, but they will eventually recover. It may be a slow recovery, maybe faster, who knows, but the point is you will recover. It will just take a little bit of time, but continue investing. In the long term, my strategy will always be the same, and that will be to keep saving, keep investing, and don't do anything crazy like trade the trends. That's all for now, guys. That was just a quick summary of the news this week. Do leave your comments, like, subscribe, and let me know your thoughts. Would love to hear from you guys. Cheers, guys. Bye.